Hello and welcome to another update video about Bitcoin. Well, Bitcoin is just moving sideways here at the moment. So in this video, we're going to take a look at the lower degree wave count while also taking a look at this movement to the upside. In the previous video, we already talked about this being a wave 4 and a possible triangle pattern that would put in lower highs and higher lows. It's doing that at the moment. And we're talking about what are the signals that need to happen or that we need to get in order to have basically a confirmed breakout to the upside. But before we dive deeper into the analysis, first a few words about the sponsor of today's Bitcoin video, Chartprime. Chartprime is a service that provides specific TradingView indicators. There are 5 specific and unique indicators that you can only get through Chartprime if you sign up to one of their plans. These are based on quite complex algorithms and formulas and can be helpful in identifying trade setups, which means they can provide additional signals that could support your trading. Indicators can, for example, also be useful to support Elliott Wave counts to give more confidence. Of course, you don't need to apply Elliott Wave to use Chartprime, and the combination of their indicators alone can provide trade setups and signals as well. They currently offer a 30% limited time discount, so if you are interested in this, check it out. Of course, bear in mind that no indicator works 100% of the time. Here's an example of the Bitcoin chart with one of the range indicators. This indicator combines various indicators in itself, so you can adjust it to your needs, but it basically shows your range resistances, different support resistance levels based on different time frames, and it categorizes them based on their relevance. And this indicator provides you with dynamic support and resistance bands to which the price is reacting. And if you're interested in checking it out, make sure that you use the link in the video description and on their website. You can also read through testimonials and you can join their Discord community, which you can join in case you have any questions about how to use those indicators. Okay, so let's take a look at this entire wave pattern here that started already in November it started actually. So we can still look at this being part of a larger, in yellow, 5-wave impulse here to the upside. This is, however, obviously it's not clear if we get all these 5 waves, yeah? So we need to take it level by level here. I'm always going to give you the key relevant support areas. At the moment, the relevant main bullish support is here at 18,650. That is the main bullish support. This is for the larger 4th wave. If we come down now in this wave 4 in green, which I think Ethereum, for example, is doing, then we should not drop below 18,650. This doesn't mean we can't drop down. Yeah, of course we can, but we shouldn't. Because if we do, then the bear market is most likely going to continue. Until then, I am focused here on higher, and we define in every step of this impulse the relevant micro support levels, and we've got one of these here. So at the moment I'm looking at all of this as an impulsive move, possibly in a C wave of a larger wave 4. So it would actually eventually look like this. This C wave would be part of this wave 4, and we either get one more leg down and up or 2 downs and ups. So 2 higher highs and 2 higher lows in the relevant wave 4s. As we get this move up, at some point we will be able to call it a complete impulse in 5 waves. And if we get that, it would increase to a degree the probability that the bear market low is already in. However, as explained in previous videos, we cannot really say that with strong evidence or with strong conviction until we come down in an ABC structure, ABC, and find support here somewhere of a wave 2 support area. Now I can't give you that area yet because we haven't really topped, or we don't really have an evidence that we've topped yet in this 5th wave, and therefore I cannot calculate support for this area. But at some point we will be able to do so, and that will be again one very relevant support area for you that you can use to either scale in long, or at least, when you don't want to do that, you have an orientation if the bear market is ending or not, because this will be the second confirmation. 5 waves up is only the first confirmation. That's not enough because it could just be part of that larger 4th wave, which will sell off impulsively. In a 5th wave, that's still a realistic possibility. Sometimes I get the questions, do I think the bear market is over? My personal opinion is no. But of course, I'm not making the market. we can only analyze what we see, and at the moment I can tell you that we don't have sufficient evidence yet to confirm that the bear market low is in. We want to take it level by level, and if we get the proper structure on the relevant time frame, then I'm going to be able to confirm that to you. We need to be careful here. Yeah, I've got a degree of responsibility here as well, of course. But this doesn't mean you have to wait with going long or trading or buying Bitcoin and Ethereum and other cryptos until we have that confirmation, because certainly we are in an uptrend. We already talked about this uptrend back in January, no, in December actually, from the second half of December. Yes, it moved up stronger than expected, but that is what sometimes happens, and the trend was certainly going to be up. So, you know, regular DCA, for example, for most people, dollar cost averaging is probably the way to go, or just trading the larger swings. So here it's still holding support. I'm still seeing this as an Elliott Wave triangle, and we can still, yeah, you know, count this here as an A wave from the previous video. The B wave to the upside was probably made here. Then we came down in a C wave. We might still be putting in the D wave. Yeah, that's not entirely clear. The D wave would be an ABC as well, so it could very well be A wave, B wave, and the C wave in wave D of the triangle, because we haven't reached the ideal target for the D wave. You might remember from the previous video, I think we checked the target and we said the ideal target would take the D wave to 22,860 pretty much. Now, they don't always have to get there. Yeah, don't get me wrong, they don't always have to get there, but it is all about likelihoods, you know, and now that we haven't reached it, I mean, had we reached that target, you know, we could say with more clarity that the low was probably, that the high here in the D wave was already in. If you, for example, have a target like that and the chart reacts to it, then you can assume, okay, we might now be in the E wave. Now that never happened, therefore, surely the D wave could be here, and the E wave could be this one already, and then we completed this, but it's just not, it's not very clear yet. And then very important, if we lose now the trend line here, this support level, which is at 22,300, that's basically here the micro support within the larger support area. If we lose this, then we've got one more chance to find support at 22,000. But then also I wouldn't call this a triangle anymore. It will be then something strange, and the risk will increase that this is going to break to the downside. So this really needs to hold. And then it could follow Ethereum as well. Yeah, to the downside, and then we will have that situation. If it loses the 22k level, we will have the situation that the probability increases that the wave 3 was actually sitting here on the 18th of January at around 21,700, yeah, 700, and we came down in an A wave only. We moved up in a B wave, overshooting B wave, and we're now coming down in the C wave. That's absolutely possible. And that is unfortunately what sort of Ethereum is doing as well. I mean, fortunately or unfortunately, a lot of people were upset because they could not accumulate lower. I think a lot of people waited here for lower prices in the green support area, even though we touched it. So, you know, if you wanted to buy, you could have set your first limit order here, but a lot of people missed it, I think. They waited for a deeper retracement. Everybody might now get another chance, right? Especially Ethereum. Bitcoin, not entirely clear, but I would also say if Ethereum comes down, then most likely Bitcoin might trigger that, you know. Let's see. I mean, this is only the count how it's unfolding at the moment, and it tells you which levels need to break that we get this fifth wave. If it's going to break or not. I mean, yesterday it all was looking good for Ethereum as well, and suddenly it broke that support. Nobody can, you know, unless you're a huge whale, right? Nobody can really manipulate this, at least not we can't, you know, we can't. Of course, there are people who can, and institutions who can. But if it's following here the count, we need to wait for a break of the B wave, which is here at 23,180, to confirm that a wave 5 is happening here into the 24-25k region. So yeah, looking forward to that. Until then, we are tracking here the triangle movement. Again, it could get in one C wave here of D to the top of that descending trend line. The indicators don't really help us because it's just moving sideways at the moment, so we just need to wait until the market has made up its mind. Maybe here to conclude the video, I just wanted to have a look at the financial calendar here for this week. I mean, today is obviously here Wednesday the 25th, so there isn't anything exciting happening today in the markets. but tomorrow we've got advanced GDP data that will certainly lead to some volatility and could shake the market up a little bit. That will be released at 8:30 a.m. Eastern time. So as you can see here, the forecast where was I? Forecast is currently 2.6% for advanced GDP. And then Friday will be interesting. Looking forward to that. Inflation data, core PCE price index, also going to be released at 8:30 Eastern time AM. And then very important, next week is for 2023, the first interest rate decision of the Fed, which will be on the 1st of February down there, together with job openings and manufacturing PMI. So that will be an interesting day, and probably the days leading towards the 1st of February. Looking forward to that. Lots of volatility, lots of interesting price movements, and the next one then that we can look out for is the CPI in February. But yeah, certainly very interesting. I hope you liked the update about Bitcoin. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, please check out the channel membership. Thanks a lot for watching. Bye-bye.